Good afternoon, everybody. This is Mark Lambert from the Theta's Pendulum Google group, and I just want to show you how I set up basically scalping trades during the daytime. This is not a video where I'm going to be showing how I do timing or anything like that, other than the fact of stuff I've already basically told everybody. One of the things that I always look for is moves between 356 to 364 degrees. And basically, if you look at yesterday's high, which was right here, this is exactly 359 degrees from the high to the low. One of the things too, let me shut this off right here so make it a little bit easier for us. One of the things that I like to set up, especially when the market has gapped, is basically I'm looking for the market to fill this gap at one point or another. So this is like a first primary target. This is basically just a day trader's outlook of how to play the market right now. And this right here, as we gapped open this morning, it was never really filled, but it was pretty close. Same thing here, came very close. But one of the things I like to do, the only indicators I would ever recommend to anybody, I mean, I don't use MACDs, I don't use RSIs, I don't use stochastics, I don't use any of that stuff at all because I think it basically gets in the way of the price action. Some people can use it to find divergences and so on, but the thing is it's still a lagging indicator, which is why I basically abandoned them several years ago because I took too many hits using them. But basically what this is right now is the advancers and decliners in this chart that I have on the New York Stock Exchange. On the same exchange right here, this is the tick. On the Thinkorswim platform, it's very simple. It's $ admin minus $ DECN, and then same thing for the ticks. It's $ tick. I know the TradeStation platform and the other platforms have slightly different symbols, but basically you're looking for the same thing. Alright, so basically what happened this morning is as the market basically opened up, now it started dropping down, and this is only primary trading hours right now. These, just to let everybody know, this will only work during 9:30 to 4 o'clock. Actually 4:15, because sometimes it does, if you got it set to extended hours, it'll go up to about 4:15. One of the things too, this is only the primary session that I'm logging right here, which is one of the reasons that I like to look at this also. Some people use Elliott Wave. I use Elliott Wave somewhat. I really don't use it a whole lot anymore. If I was to say that this would be wave 1, wave 2, wave 3, we're possibly in a wave 4 right now. I do have some timing mechanism that I am looking at for tomorrow, which tomorrow could be a significant top, maybe, but that, I'll just have to judge that when it happens. But that top has to meet certain criteria for me to basically go short at. But anyways, this is a scalper's trick. This trick will enhance anybody who tries to do day trading. And the way I use these indicators, as you can see, the market was falling now. I basically, this morning, bought very close to this low, and I sold out very close to the high. And I'm going to show you why. I have my crosshair positions right here so that you can see them on all three screens, which will kind of help you kind of gauge. One is I'm looking for a gap fill this morning. Two, I like to see 360 degrees or between 356 to 364 degrees. That doesn't work all the time, but it works often enough. So as the market is dropping this morning, which I was not short, as a matter of fact, I was out a little bit earlier this morning, and by the time I got back, the market was already falling down here, and I just quickly assessed where we're at. Now, if you take a look, as we hit the bottom right here, very close to filling this gap, if you look to the left, you can see where my crosshair is. All right, just let me do it this way. Imagine we're here. This is where we are right now. If you look at the tick chart, right here in this area, we are actually up. We're doing a higher low. As we're hitting the support level, as we're hitting a timing level, and basically that's a cue to me to really get ready at that point in time to go long. And what the tick is is the amalgamation of all the stocks on a New York Stock Exchange that are ticking up 1 penny at that particular time. So usually you'll see this turning sometimes a couple to 3 minutes before you'll see the market actually drop to the bottom or come up to the top. And usually as it comes to a top, I like to look for a culminating move also. Usually it's one of the highest ticks that you see. And same thing with the bottom. You want to see one of the lowest tick readings, which just was the lowest tick reading I believe that we had this morning. Let me take a look here. Yeah, that was the lowest tick reading. And now here we are, as it was the lowest tick reading, the market drops. This tick right here is already making a higher low, and the market is still dropping. And once that made that higher low, that's where the market basically bottomed and started to move up. Okay, these are very, very short-term indicators that you want to use to confirm. Only to confirm. You don't want to be trading this on the way up, trading this on the way down, trading this on the way up, trading this. You'll lose money if you do that. You only look at this indicator right here only when you know you're coming into a support or a resistance area. Okay, and as you can see, the market basically bottomed, followed up. I placed my stop loss in, and I said that I'm just going to wait and see what happens. And I was really hoping to see this gap fill, which it didn't really fill. I mean, it came maybe a quarter of a tick away. But as I was approaching, the same thing again, as we're approaching this high, I'm starting to look at my indicators. What do you have? When we hit this exact high, we were already making a secondary lower high here on the ticks. And these things react very, very quickly. Sometimes you'll see this thing shoot down in a second and the market's still standing still, and then 30 seconds later you see the market start moving down. So this is the first thing I was looking at right here, and that's what caused me to basically close out my long trade, because my perception was for today that we would probably have a sideways action after the last couple days worth of rallying that we had. And with that, I am looking for some timing on January 17th, and I'd like to see the S&P 500 basically hit around 1856 to basically confirm the timing and pricing signal I'm looking at. And if that happens, then that'll be all short. If it doesn't happen, then I'll just have to wait and reassess, because timing and price is a very fluid thing, and that's the way I kind of look at the market. And in the big picture is this chart right here. Is something really I haven't really seen anybody out there post. Maybe a few people have posted it by now, but once I saw this several weeks ago, I saw us creeping up to it. I said that's where the market's going to go to. And I initially had a target from several months ago of the first week of January being roughly around the mid 1800s. And the timing part worked out good, and basically so then the high. But the market's not going to go down easy. So this is like one of those things you might have to take several stabs at it if you're going to be going for a long-term short. Or if we do break this channel, then I would expect to see a pretty horrific rally at that point in time. But either way, assess it as it comes. One of the things too, as of I know a lot of people don't really plot angles like this, but basically from the 522 high, you strike a 1-by-1 trading bar angle. Basically went right to the tick yesterday and backed off. Thinking we might slightly breach it tomorrow, and if that's the case, or maybe we might not. If I line up the price, it's pretty close to where I'm looking for the market to be. This shows like around 1854, very close to that. So let's start looking around 1855 to 1856 tomorrow, and that could be a decent short. So anyways, I just thought I'd put my thoughts out there and show how I use the intraday ticks in advances and decliners. They're very, very useful tools. Those who like to basically just day trade. And Godspeed to all.